Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 24th of January. We've got a rebound in risk appetite, quite a strong one actually. Look at how equity markets have really taken off this morning. That's come in the wake of an announcement from the World Health Organization that apparently there is no need to declare an international or global emergency quite yet for the coronavirus, and subsequently we've seen a little bit of a retracement subsequently on how risk appetite has been performing. There was a big dip back in risk appetite where volatility increased quite sharply. We saw moves into safe haven assets. We saw treasury yields falling away quite strongly, but you've started to see a bit of a moderation of that. Certainly treasury yields ticking a little bit higher today. We've seen the gold price coming back. We've seen the yen unwinding some of its recent strength. And the big mover being equity markets in Europe certainly taking off today. So pretty much across the board, very strong risk appetite, and commodity currencies are positive. The safe haven plays, yen and Swiss franc, are negative. So fairly consistent playbook. We've also seen the oil price, which fell sharply in recent days. To a certain degree, that was coming about with a fear that the coronavirus may well have a significant impact on global oil demand. That decline has moderated, not really taken off, I might add, but still it has moderated. So it all plays into the same sort of playbook there. Now, this morning, the flash PMIs are out or coming out. And what we've had is the European data coming out already, and Eurozone, a little bit mixed actually. Manufacturing improved, but services disappointed. So we saw a slight underwhelming of the composite PMI. So that Eurozone recovery is still pretty sluggish, certainly according to how the ECB set their stall out yesterday in Christine Lagarde's press conference. She was a little bit muted, and the risks are still tilted to the downside, it would appear, but that's a little bit disappointing, and one of the reasons why euro is underperforming at the moment. But we've seen the composite PMI for the UK. Look at that data for the UK. January's numbers for the flash readings are well ahead of expectations across the board. Services, manufacturing, composite, all coming in well ahead of expectation. It seems as though with the election uncertainty removed, with Brexit uncertainty removed, we can finally see, hopefully finally see, speaking from someone from the UK, finally we can hopefully see a little bit of economic activity returning to the to how we see the economy performing. And subsequently, we've seen sterling, which is benefiting on the back of that. So that's going to be a positive, I think, for the UK economy. And it means that there's no real need for the Bank of England to cut rates now in the January meeting, and the market will be pricing that in. Even, I mean, it's been doing so in recent days anyway, but sort of solidifies that move. So that takes me on to US data into the afternoon. Let's have a look at the US flash PMIs at 245 today, expected to be there or thereabouts where they were last month. 52.5, 52.9 for manufacturing and services. So that takes me on to my chart of the day, which is the German DAX. Now, we had a selling pressure through equities in recent days, and I said in the morning report that I thought that was going to be a buying opportunity. It's back into the DAX, pulled back into this support band of all this overhead. Over this underlying demand between sort of 13, if I get the crosshair on the low one, 13,300 up towards 13,425. All these old highs are all underlying demand, and that is where we see the lows coming in now. And again, this morning we're seeing the market gapping higher and really going away. So it certainly looks as though weakness continues to be seen as a chance to buy on the DAX. Now that reaction high, that 13,596, the dotted line here, was the old all-time high. That was breached on Wednesday. 13,640 is the new all-time high. That is obviously now the next resistance in, which is within range today, certainly. But you do have, I think, a manner of buying into weakness on the DAX. So you'd be looking at filling the gap potentially. Initially, that breakaway gap 13,486. Once that's filled, you'd be pretty confident about buying again, but 1345 is also the old breakout high. You've got the old these lows that come in around 13360 area of the last couple of reaction lows in last week's low and this week's low, 13360, 13380. So anything around that level is still a buying opportunity, I think, for the DAX, and there is still an appetite to buy, given the fact that we remain in positive configuration on these medium-term momentum indicators. RSI holding above the mid-40s, moving into the mid-60s. That's pretty positive, as are the MACD lines and the stochastics. All looking good for further gains in the DAX in due course, and we're looking to post all-time highs once again. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.